Before indicators, before strategies, before entries, there was price. Price action trading is not a strategy. It is understanding how the market thinks. Every candle you see on the chart represents real decisions: fear, greed, patience, panic, confidence. Banks don't use magic indicators. Institutions don't chase signals. They read price behavior. If you can read price, you don't need to predict. You simply react intelligently. In this video, I will break price action down, clean, simple, and practical. No theory overload, no fantasy trades. By the end, you will see the chart differently forever. Price action is the study of raw price movement without reliance on indicators. It answers three questions. Where has price been? Where is price reacting now? What is price most likely to do next? Price moves because of orders: buy orders, sell orders, stop losses, pending orders. When large institutions enter the market, price reacts strongly. Those reactions leave footprints. Price action is learning how to read those footprints, not guessing, not gambling, not hoping, reading.
Candles are not decorations. They are conversations between buyers and sellers. Each candle tells you who was in control, who lost control, where pressure entered, where momentum died. Key candle concepts. Strong bullish candles equal aggressive buying. Long wicks equal rejection. Small bodies equal indecision. Large bodies equal commitment. A candle does not mean anything alone. Context gives candles meaning. A rejection candle at random means nothing. A rejection candle at key structure means everything.
Structure is how price organizes itself. There are only two structures: uptrend, downtrend, and consolidation in between. Uptrend, higher highs, higher lows. Downtrend, lower highs, lower lows. When structure breaks, bias changes. Price does not move randomly. It moves from structure to structure. Smart traders do not trade everywhere. They trade at decision points. Support and resistance are not lines. They are areas of memory. Price remembers where big orders entered, strong reactions occurred, breakouts failed, stops were taken. Support, an area where buying previously overpowered selling. Resistance, an area where selling previously overpowered buying. The more times price reacts to a level, the more significant it becomes. Institutions defend levels. Retail traders chase candles. Be the one who waits.
Trend lines are not predictions. They are visual guides of momentum. A valid trend line connects clear swing points, has multiple touches, is respected by price. Channels show you where price is cheap, where price is expensive, where profit-taking occurs. You don't buy at the top of a channel. You don't sell at the bottom. You trade with flow.
Price action traders do not jump in blindly. They wait for structure, location, confirmation. Confirmation can be strong rejection, break and retest, momentum shift, failed continuation. Risk management is not optional. It is survival. One trade should never destroy your account. Consider
Drawing too many lines. Trading every candle. Ignoring higher time frame bias. Chasing breakouts without structure. Over-leveraging. Price action rewards patience, discipline, clarity. Price is honest. Indicators lag. Emotions lie. The chart will always tell the truth if you learn how to listen. Trade less, wait more, think deeper. This is price action trading. Subscribe and watch the next video as we break down Fibonacci and harmonic trading strategies.